unfundable. Fusion reaction.
Oh, hell yeah.
Get to the chopper! Press go up. Gigantic fusion reactor that just works.
Multiple income streams and real yield.
Ooh, yeah!
Cheats can no longer dump on your heads. The revolutionary decentralized finance protocol. Fusion reaction in T-minus 3, 2, 1.
Fusion! You don't know the power. The math is unfundable. Fusion reaction.
Oh, hell yeah.
The mothership. And what's it gonna do? Everybody excited?
Oh, hell yeah.
In my creation! Fusion.
Get ready to rumble.
Fusion.
Gotta do a huge shout out to Cool Sheet. That song just hits.
What's up, everybody, and welcome to our official EMP live stream. We come to you every Thursday at 6:45 p.m. Eastern. My name is AJ, I'm the team lead here, and as always, I'm joined by my co-host with the most and fellow team member, LA, how are you?
What's up, guys? I'm fantastic. Ready for a real banger of a live stream tonight. Let's fucking go.
Yes, I love it. I know we're jazzed up today. Everything's looking really good. We're hype for this AMA. So we'll talk about all that as we get going. But before we jump in, please remember to like, comment, and subscribe. That really helps us with our engagement. Now that we're seeing maybe the bull run finally happen coming into the end of this year. Obviously, we want to make sure we're getting a lot more new eyeballs. And if there's high engagement in our community on our socials, then the algorithm pushes that out to new potential crypto people. So we want more crypto people. All right, let me go ahead and pull up my notes for today, and we'll pull up the comments. We will do an AMA. This is the AMA. We will do questions as part of the AMA at the very end. So if you have questions as we go, we'll get to that as well. So all right, give me 1 second here. LA overall, again, we were joking earlier that it was one of the first Thursdays there hasn't been a giant market dump right before our show. So yeah, market's
we
looking
were
good, huh?
joking because I always write the notes in the morning, and then often so busy right before the stream, I don't check the market. And the last 3 weeks in a row, it's dumped right before when I've written something about how great the market's looking.
Yeah.
So for the first time this week, that didn't happen, which we're celebrating.
Totally. So everything is finally looking good on stream as well. But yeah, we're gonna start right off with bonds. Bonds has just absolutely been killing it. We have we did bonds are going buck wild. I like that, LA. But yeah, I'll go ahead and share my screen and we'll talk a little bit about it. But LA, I know you've been a fan of the bonds, right? Makes it easy, and we've been seeing a lot of success.
Oh yeah, this is just, it's clear that it has the right product market fit. it's clear that there's a lot of building interest in the bonds. And I mean, we'll go over this, but they've already paid out an insane amount of rewards in just a few short weeks. So we are on the right track here.
Yeah, absolutely. So here we go. Let me pull it up. Hopefully y'all can see my screen. Uh, um, yeah, if I cut out or whatever, Ella, try to give me a heads up again. But so yeah, here we are. I mean, we're just about 1 month since we've launched bonds, and even over the last 2 days, we've had about another 100 grand of TVL in the fund. So that alone is extremely bullish. If you include Bernard bonds, our other white labeled option, we're almost at 1.3 million total. So that just shows again, like Ellie said, the amazing product market fit. The fact that not only is this something that you know people have been wanting to do for a while, they just really maybe haven't had the knowledge or the time or the expertise to do it. We've packaged it all in a very easy to understand front end. All you have to worry about minting, redeeming, and earning, and we made it as simple as possible. And that I think has really helped us scale all this. And we've had some incredible interest as well, which we'll talk about today, as you can see from the title. The word is spreading, and the TVL is growing. So all that is super bullish. We did just top up the APR as well, back over 100% APR. Again, remember, as money comes in to the bonds, we have to deploy that capital. So sometimes the APR will fluctuate day to day, but overall, it's still very consistent, and we feel it will be that way for a while. So, and yeah, up in the top right, we added the new total USDC distributed counter. 35 grand in the last, what, 3 weeks about has already been sent out, and that number will just continue to grow and grow and grow. And again, in 100% APR, you're looking at just under 10% monthly, and that's roughly $100,000 a month in yield. So things are really looking good, and we hope to scale from here. So, LA, any other bullet points on that first section, or what do you want me to go into now? Yeah.
Yeah, and this doesn't even include like 3 other projects that AJ's been in meetings with this week who are interested in white labeling. We're now doing this as a service. The first one was Bernard Bonds. That one has set an amazing example for other projects to take a look and really see that this is something that is beneficial for their protocols to invest in, because it provides yield for them to provide to their users. And so this is a great first example. And since then, we have gotten messages from a lot of other projects.
Yeah, absolutely, LA. So that's a great segue. Again, this is the first white label Bernard bonds, over 200K already, and this has only been up for about 2 weeks. So the demand is there, the infrastructure is there, and like LA said, we've been in meetings all week, not only from other protocols, but other institutional interests as well. I know a lot of you know that we've worked with hedge funds in the past, especially with EMP. A lot of these guys have full-time concentrated liquidity providers on staff, but they're able to utilize our software to make it easy for them. And another meeting with again another institution outside of the relationships we already have this week as well. So lots of momentum. Again, even if half of the leads come through that we're in talks with, I mean, I think we easily see 5 to 10 million in total TVL over the next few months. So all that is really, really bullish. So, all right, was there anything specific, LA, before I go back to the notes and really give a deep dive on the conceptual things in terms of what you want me to show for bonds? I know we did a really big overview in the last 2 AMAs on how to actually mint bonds. Do we
Yeah.
have any? Yeah, go ahead.
Yeah, I think maybe if you just go back to the main bond page and just show, yeah, so take a look at what the price is at today. I know a lot of people have been scooping these up every time it dips below the original 0.1 that it launched at. And we're about to go over just some things to open your eyes more wide to see how it's not just about the yield that you're going to earn on a daily basis from holding bonds. It's about a whole lot more than that.
Yeah, amazing. All right, this was hopefully again, and I may go over a few things twice just so it settles in with everybody. But while I have the screen share up, it's easier to explain. We did and that's another thing. We did some more AMAs of our own this week with a few communities. So make sure you check that out. We had a great conversation with an up and coming DeFi channel with a great guy named Chris. We are he's part of the community as well. But we did an AMA together, and again, it's posted in our socials if you want to watch the whole thing. But something came up where I think a lot of people are still sleeping on how powerful this is. So I promised that we would go over it in the public AMA, and here we are. So to LA's point, obviously, all of you that are here, and even if you're brand new, the overall concept is you mint a bond. Again, down here, another word for mint would be buy or purchase. So you purchase a bond. Right now it's 0.086 ETH and about 208 US dollars. That number fluctuates based on the price of ETH and the price of the fund. So right now, bonds launched initially at zero point 0.1 Ethereum. Um, and the reason that number fluctuates is how we are doing compared to Ethereum. So as you know, if you go to DBank here and everything is fully on chain and transparent, about half of the LP is in Ethereum, but the other half of the LP is in many different assets. So REI, Aerodrome, Banker, Giza, all these different plays. And so if those particular assets, SPX is a bullish one. If those particular assets go down as opposed to ETH, then that affects the overall price of a bond in terms of ETH. However, it's like a slingshot effect. So right now, things are down a little bit again with all the geopolitical news, everything else. But usually, when we do finally see an alt season, those tokens go up dramatically, and therefore, in terms of ratios, we are outperforming ETH heavily. So that's when again the bonds become more expensive in terms of ETH and in terms of dollar value because again, even if we stay at the ratio and we're doing just as good as ETH in terms of the fund value, if ETH doubles, even at 0.86 per bond, now a bond is worth $500 rather than or $400 rather than $200. So that is the fundamental. I'm going to explain why this is important in a second. Hang on, let me get back. All right, so why now that you know the fundamentals, why this is important. So the bond APR that we're getting again, this 103%. Again, we're shooting. It's all variable. Nothing is guaranteed, but I think that we're going to be easily able to maintain between 90 to say 120% APR. Some months even 150% APR if the volume is there because the more volume, the more fees, and the higher the APR. So that's the real yield. That's where it comes from. But one big thing I think people are still missing out is the exponential yield in terms of APR. So right now, minting a bond at $208, your APR is calculated in dollar value. So now let's fast forward a month from now, 2 months from now, 6 months from now. Now ETH is double or at least back to all-time high, when you mint a bond at $500, um, your APR will still roughly be that 100%. So what that means is we're always producing APR at current fund value. So if you're minting bonds now at $208 and we get a double in ETH and the fund still performs well, you're essentially earning double the APR that you were when you minted. So it's really a really cool way that those that are early are getting even more. And again, we're gonna have some metrics that show this at the bottom. We're always updating the UI, and I think that will help people realize this a little bit more. But obviously, we never encourage you to do something you're not comfortable with. Never invest more than you can afford. Never compound more than you're comfortable with. Again, just want to be perfectly clear. But if you're building your position now and you have a conviction that ETH and the overall crypto market will be, say at least a 2x by the end of the year, you're getting a 2x on bond value and you're getting double the APR by the end of the year. And why that happens and why it's so sustainable is when we provide LP, we are providing two tokens. So again, just to give a really easy example, ETH and REI, for example. REI is a technology-based token that is a big time alt token. So REI ETH, when we provide LP for REI ETH, whenever there's a swap happening, which is how we make our fees, we get a piece of REI and a piece of ETH. In other words, we're getting actual tokens based on the swap fees. Our technology through the vaults automatically converts those tokens into stables. And that is what is so cool about our software is that we're locking in those profits because, if you just held your profits from the swap fees in the actual tokens, then you run the risk of those going down or being a lot more volatile. So because we're doing that, when the overall market doubles, we're still earning the swap fees in tokens, but then theoretically those tokens are worth double as well. So that's how the math works in terms of again sustainability, where we're not necessarily doubling the APR based on the real yield, but we're doubling the APR based on your entry of minting bonds. So LA, does that help? I know it's a little overwhelming, but when you really break it down, it becomes incredibly bullish.
Yeah, for sure. Absolutely.
Cool. All right, awesome. All right, that was a big part of it. Let me go back to my notes, and then we can always come back if we need to.
Yeah, and so I'll just mention that I've, especially in the VIP chats, been reading that a lot of people, what their strategy that they're doing is every time that ETH dips, the price to get into bonds also dips. And so they see it as a way to raise their APR by scooping up more bonds every time there's a decent sized dip in ETH, because then when it comes back up even to where it was before, they've already made profit aside from that daily yield. And that in itself, if you work that kind of strategy, right? Obviously, none of this is financial advice. It can greatly increase the total APR that you're earning over time, and it can make a big impact on your earnings.
Yeah, LA, I love that. So, and shout out really quick too. I see in the comments, Grover, obviously a staple, and R2R in the house. So, shout out to Thomas. Again, we've had a month-long sponsorship with R2R, and he's been doing daily coverage almost on the bond value. It's been fun to see it increase along the way. But yeah, to your point, LA, I mean, that is again just another multiplicity effect on all this. So, nothing I say is financial advice. I really encourage all of you to take profit in your yield and do as you wish. But again, just theoretically speaking, when you're buying more bonds and compounding, it isn't like what we're used to in inflationary protocols or ROI contracts or all these other things where you essentially, if you compound too much, you can compound into oblivion and really never realize the gains. That really isn't the case with bonds because you're buying more actual assets. So compounding, while ETH is low, while the ETH ratio is low, again, anything under 0.01, I'm sorry, 0.1 ETH, um, and while your position is, so maybe you did mint a bond, at the higher rates when ETH was up, and when the ratio was up, then anytime we're below that ratio or below that dollar value, I would highly recommend, again, not financial advice, to be compounding because to LA's point, when we do go back up, not only are you building a bigger position to yield on, but now you're getting all that price appreciation of the principal as well, which is massive. So again, those that are building their positions right now will be set up incredibly well, a few months from now. So again, just keep that in mind. And again, if you're not in a position to do that, it's no worries. It doesn't help or hurt the protocol either way. That's another beautiful thing. There is no, token or liquidity or anything that we have to manage. If you want to completely leave and redeem, you're free to do so. So, and even all of us are kind of wanting people to redeem because remember there is a 10% um, redemption fee, and that redemption fee doesn't go to us, but it stays in the fund. So now the fund is over collateralized, and you're earning on money that you never even put in, which is crazy. So I mean that also will help APR in the long run. So things are really, I mean, the system that we designed is really the pinnacle of all the experiences and all the things that we've been building over the last 3.5 years. And this is the fuel that will drive our mothership. I mean,
Yeah.
Fusion is still the backbone, and eShare and GDEX and Spark and all the other things that we have. Again, Spark will eventually become DexSwap, but all the things that we built and have supported through our ecosystem remain. But bonds are the lifeblood of all of this that makes everything else more successful. So
I want to mention one more thing to add on to what you said as well.
yeah,
And just
please.
like a little analogy, which I think is just another really powerful piece of this. So, say, for example, and this is in regards to what we were just talking about, how you could just hold ETH in your wallet, and as the asset appreciates, so will the value of what you're holding. And the same thing works for bonds. As ETH rises and as the values of the underlying assets that the yields that the funds are invested in within the vaults rise, so will the price of the bonds, right? And so one really cool thing I was thinking about is that it works so differently from how other things in life work. Like, say, for example, you bought a shirt from the store, and then like 20 days later, you decided, man, I really need the money right now. I haven't worn or washed the shirt yet. And you go to return it at the store. You're not going to get more for that shirt just because lots of people are buying them. You're going to get back what you paid for it. But the thing is with bonds, one, you earn yield daily. Two, you have this amazing ability for the bond itself to be worth more at a later date as ETH is worth more. But three, when you go to finally redeem it, aside from that 10%, obviously, which you would have earned enough in yield by that time to cover that 10%, you can redeem it for more than what you purchased it for, which if I just said that on its own would be like, duh. But if you think about it, the way that most things in life work, I mean, even an NFT, like if you go to sell it on the open market, you can't just decide that people should pay 2 times more for it if there's not the demand for it. But there doesn't have to be demand in this situation to drive the price up. The only thing is that the market goes up and that ETH is worth more. And so if you hold on to it until a strategic time when you really need to or want to redeem it, until the price of ETH is up, you can redeem it for more than you originally paid for it while you're earning yield that entire time, which is just the most bullish concept. And so, yes, if you're holding just ETH in your wallet and the price of ETH goes up, it'll be worth more and you could sell it for more, but you're not earning yield all along the way, every step of the way. And you don't have this ability to, market dips, buy some more, earn the whole way, sell them as they're higher. Like, it's just so much better than just holding straight assets in your wallet.
I love it, LA. Man, there was some major gems in that breakdown. So I want to go over three things. So don't let me forget. One is price appreciating asset. One is oh man, I'm gonna forget now. You made some great points, but all right. Let me just go through it. So number one is not only is this a uh uh this is an income producing asset. So and a price appreciating asset. But we'll focus on the income producing part right now. So again, if you just go back and look at just basic economics, one of the biggest wealth growing vehicles is investing or owning income producing assets. Now, I've done this analogy a few times in regards to fusion, and I'm sure you guys have heard me go over this, but it's really important. So the richest people in the world, so Bezos, Musk, Gates, all of them have made their money in businesses, and businesses are technically, a income producing asset. So the richest people in the world, they buy things, whether it's a business or real estate that they then rent out, or things that actually produce income. And this is the same concept that we have with bonds. So bonds are essentially, a little business or a little rental property that are producing income without having to, plunge toilets or get a call from your tenant at 2 a.m. So, and again, I make that analogy to be as simple as possible, but that is how cool these are. And typically, if your business is successful, or you have a property in a nice area, you're able to actually sell those assets for more than what you bought them for, which again is what LA's analogy was. So that all really is cool when you think about it in terms of real world um, comparisons. The other thing that you mentioned, LA, was ETH in your wallet. So yes, this is another concept that I think people again may not really fully understand. So if you break it down into black and white, you either have ETH in your wallet or you put your ETH into bonds. Those are two options. So holding your ETH in your wallet, yes, you like Ella said, the only way to profit from that is hoping that ETH goes up in value and then you sell to somebody else. With bonds, you have a lot more flexibility and a lot more diversification that actually makes your ETH grow and potentially, not only get more ETH out, but also earn more in terms of yield along the way. So again, just to compare that, ETH in your wallet, you have to wait for somebody to buy at a higher price. With bonds, you turn that ETH into bonds. You still have the ETH exposure as if it was in your wallet, but now you're getting yield, up to once a minute if you have enough bonds. And now you're also getting the upside potential of ETH. Now it does go both ways. So if ETH or the overall fund goes down, then obviously you get less value. But that would be the case if you held ETH in your wallet anyway. And again, it may be down slightly more just because we're exposed to other altcoins, but the yield really mitigates that. And we've seen that over the last month. Again, the beauty of this is that the numbers don't lie, and you don't have to take my word for it. You can do the math on your own. As an example, last week we saw ETH overall go down about 15%. But if you had been in bonds and been earning the entire time from day one in minting, even though ETH was down 15% from mint price, you would have earned about 7% additional from that downtrend. So now your unrealized loss is only 7% instead of 15%. So those are the things again that really are powerful when you look at bonds compared to just holding ETH in your wallet. And don't get me wrong, hodling is an amazing strategy. Buying Bitcoin, buying ETH, and just holding it is also a great way to hedge. But again, maybe use some of your yield to do that. Use some of your yield, 10% of your yield from bonds to go and buy Bitcoin and put it in a hardware wallet and forget about it. I mean that would be a very viable strategy in terms of again wealth preservation. So yeah, does that make sense, LA? I think that was a great
Totally.
breakdown for
Yeah.
sure.
We're ping-ponging well.
Yeah, 100%. So, all right, those were the two big things I want to cover on that. All right, so a little bit more again. In terms of APR, I mentioned this already a little bit, but we've been really consistent. I mean, other than a day or two of fluctuation, with new capital coming in, we've been really in the 100 to 120% APR from the beginning. So the sustainability is definitely there. And again, if we do get new capital coming in, we can deploy that into many new farms or vaults, or diversify further. That's the other really cool thing. I haven't counted today, but I think we're up to like 40 different vaults that we're in. So that's really cool because not only is that a way to diversify and have exposure to a lot of alts, when the alt season finally happens, but it's also a way to protect the fund because if there is a potential, whale that dumps one of the tokens, or God forbid, a hack that we have no control over, just a token being hacked, the fund is still in great shape because we're not all in on one particular asset. So that's really bullish. Again, ETH, it may be another story, but ETH has proven itself to be safe and secure, and that's why we're all here in crypto anyway. So all right, and then yeah, other than that, just keeping it more um uh being able to diversify on our own as well. We actually keep some stables in the wallet. You'll be able to see it on chain, so that when we do get new capital, we like to keep at least 5 or 10% in stables where we as a fund are also buying the dips. So that is really cool too because now we're able to DCA and really maintain that APR because we're always getting good entries as we go. So that I think is another really important point. But all right, that's more about APR. And remember, one last thing on APR, it is a yearly average. So if we see 80% for a few days and then we are back to 120% for a few days, the median is still 100% for the year. So just don't get nervous if you see the APR fluctuate dramatically. It's usually because we're getting new capital put in, not because we're not able to produce the APR that we have set. So, all right. Anything else about APR?
No, I think that we made those points pretty well.
All right, you want to go over a few of the bullet points for the bear proof
Yes.
strategy, and then I'll elaborate for sure.
This is what's so incredibly bullish, guys. So this is a bear proof strategy. It is true that the overall value of each individual bond you own and the overall value of the underlying assets would dip in a bear market, especially the value of the bond. If ETH is down, each bond will be worth less ETH, right? That's true. But aside from that, you would only realize that loss if you redeemed your bond at that exact moment. Now, what I want to talk about is how this is a bear proof strategy. bonds are truly bear proof because of how we earn through the bonds. The bond funds are invested throughout our DexFi vault system. And the way the vaults work is that you earn fees by providing liquidity through a number of the biggest dexes on each chain. And so even in a bear market, those dexes need liquidity providers because people are going to want to do swaps and there has to be liquidity in order to do those swaps, even in a bear market, and often more so in a bear market because a lot of people are wanting to sell when certain assets dip down, even though we think the opposite way. And so, with our advanced AI systems in place, we're able to absolutely maximize the ranges that we're setting in each of the vaults we're in, not only to keep the funds as stable and secure as possible through any market's fluctuations, but also to maximize the yield we're producing. And so, we monitor our vaults constantly throughout every single day to keep the ranges in optimal percentages, and everything's closely managed. But because we are earning real world income from providing liquidity on these popular dexes that need it, that need to reward liquidity providers, this is not something that goes away when the bear market comes.
I love it. Yeah, absolutely, LA, and I couldn't agree more. And again, it goes beyond just LA and I talking about this on an AMA. We have done this ourselves. We have put our treasuries to work through DexFi vaults again for the last 3 years on our own, and the proof is there. I mean, we have been able to survive a brutal bear market through EMP and through Dex Finance and their DAO. Through these strategies. So again, people get a little nervous with like a bear market coming. Um, First of all, I think we're at least 6 months to a year away from the beginning of a new bear cycle. So that's a lot of time to be earning in that gap. But number two, I really don't think that we're going to see the cycles like we have. Again, there's a personal opinion. But I'll say why it doesn't even matter about what my personal opinion is next. But even if we start getting in now, the institutions are here. We have ETFs, not only for Bitcoin but now for ETH, and a lot of the big altcoins are also now getting ETFs. I saw some bullish news yesterday, I think it was, or earlier today, where Freddie Mae and Fannie Mac are actually now accepting Bitcoin as collateral for housing. I mean, there is so
No,
much.
AJ,
Yeah,
I literally just read right before this live stream that you can now secure a mortgage with fart coin.
Bitcoin, I love it. Oh my God, LA. Oh, what a world that we're living in. So yes, I mean that again. That is my point, though. I mean, we
Ah.
we are in a new era. I mean, where would we ever have thought, we would be saying this or that it would be reality? And again, my point to all that is we definitely will have a bear cycle at some point, but it may not be nearly as dramatic as it has in the past. And as long as there is volume, and that's the other crazy part. Sometimes, like when we had all this geopolitical uncertainty over the last week, our fees that we were earning because of the volume being so high were more than we have ever had since we started Bond. So it is another kind of way of protecting ourselves because when things do get FUD worthy and things start dipping, volume usually increases and we make more fees. So all that being said is a really good sign that this is sustainable. And what I was going to say is, even if none of that comes true and we have a brutal bear market again, we have shown that we can survive it through very lucrative APR. So, I mean, even just providing stables and some higher end blue chips that again we would get out of alts and just move into more top 50 tokens or even top 20 tokens. I easily think we can still do 50 to 60% APR in the depths of a bear. So, and that is again what 10 times what you would earn in the S&P or a bank account. So again, it's all relative to why we're in crypto and DeFi to begin with. But In the meantime, I say get while the getting is good, and we can worry about a bear market when and if that ever happens. But the next, 6 months to a year, I think we're primed incredibly well to earn and see the overall market go up as well. So, all right, awesome. That's a great talk on sustainability and bear market planning. All right, one more bit of notes here, LA. Again, why is this a no-brainer? You want to go over that a little bit?
Yeah, I mean, this is not financial advice, but it's an absolute no-brainer to get into bonds. It's also a no-brainer to use some of your rewards you're earning in bonds to buy and sacrifice EMP into Fusion, and even to load up on more bonds anytime they dip below the initial 0.1 ETH that they launched at. And if you want to see quicker results within Fusion, there's a couple things you can do right now. So the first one would be to buy bonds. The second one would be to use a portion of your bond rewards every week to buy EMP and sacrifice it into Fusion. Build up your microgrid and your bond positions, and then overcome dilution within Fusion and build both short, medium, and long-term gains and strategies by holding positions in both. This is what will happen if you employ this strategy. First, we create more buy pressure on EMP. That pushes the peg up. That means peg momentum majorly accelerates and everybody wins. Getting back to peg means another big wave of marketing for Fusion. It means more of the Treasury's yield can be used to boost APRs instead of having to help support peg. It means we're all earning more. And then this is a great way to build both your bond positions and your Fusion positions simultaneously. One, bonds is more of an immediate win with long-term yield coming in as well, while the other, Fusion, is more long-term, but it pays right now to continue to build your position while you can still get a peg bonus and while you can still get cheaper EMP. So if you're stacking bonds and the gains from those bonds, think of it like reinvesting into the ecosystem to supercharge our growth. And if a large majority of us employ this strategy, peg will absolutely be soaring. And I know there's been a lot of talk lately about why does it matter if we're back to peg? Just in a nutshell, know that when we are back to peg, we can carry out a lot of strategies that we have been waiting to carry out because we have to get back to peg first. One, of course, that marketing. Two, shifting to more focus on building APRs and bringing in new users because of those newly, heightened APRs. It is an important step, and we can't do it alone. AJ and I can't solely be responsible for getting back to peg, but these bonds are a vehicle for peg growth, retaining peg, and maintaining peg. And so this is such a wise strategy, not financial advice, but it's something that we should all be exercising every week if we can.
Yeah, I love this, LA. So again, there is a lot to unpack here, and I see a lot of questions that we'll go over at the end for sure. But yeah, I mean, the whole idea is, and I made the analogy a little bit earlier, where bonds are becoming the gasoline or fuel or blood of the ecosystem, meaning this is how we're able to then scale our other parts of the mothership. And to LA's point, and maybe we can put together some sort of a visual representation of this. But bonds allow you to actually do all the things that we are encouraging without having to bring in new capital to each part individually. So again, I know a lot of you already have exposure in Fusion. I know, GDEX, Fusion, eShare, all the tokens that we have. And maybe you're tapped out in that regard. But if you're able to get together some income to just go into bonds, it creates this perpetual loop without ever having to bring in new capital. So again, just let's go through theoretical what I'm saying. Again, not financial advice, but if you're able to buy 1, 2, 5, 10 bonds that USDC that you earn every week or every minute or every hour, depending on how big of a bag you have, maybe do say a 50-25-25 strategy where you take 50% of what you earn from bonds, you put that back into bonds, so you're always building your position. 25% you literally can just take and put it in your bank account or buy buy something nice for yourself, take profit solely, and the other 25% you can use to buy and sacrifice EMP or buy eShare or buy GDEX. And what that does is, again, it helps the ecosystem, it helps you build your positions, and it does all this without having to continually bring in new capital individually to each piece. And this is going to segue really, really well into the next part of what we're talking about. And what's in the title is to, B2B scaling. So business to business scaling. We're already seeing people do this from an individual and from a protocol standpoint. So I have a whole section on that. So let me get to that in a minute. But just to back up again in terms of EMP, we are doing this as well with EMP and eShare and everything else. So, the Treasury implements the same strategy where we're building our bond position. We're then using the yield to support PEG. And then once we're at PEG, we use the yield to pay out, users in Fusion what is indefinite. I mean, as long as bonds are producing, we are now able to use that revenue to support everything else in a very sustainable way because funds are always coming in to do so. So that whole concept is really, really important. And, it's what we do already. And why, Fusion, the more we're able to spin this flywheel, again, we keep calling it a flywheel because the whole idea is that it spins faster and faster and faster as we grow. And um, when the Treasury now has over $2 million of bonds again, and we're looking really good. Now we're looking at maybe what just based on rough math, if we had even $1 million in the Treasury and bonds again, without all the other revenue streams we have, but we're just talking this specifically, that is roughly $100,000 a month from bonds alone, and that 100 grand can be put into peg recovery, peg stability, then APR and fusion, and then we're where we want to be. So it's a very, very clear path to success, and we're working that path right now. So all right, anything you want to add to that, LA, in terms of
No, that was
our
perfect.
ecosystem?
No, that was great.
All right, so to take that a step further, we're seeing other protocols now implement this. So, and shout out to Birdie. Bert and Ernie have a cousin named Birdie. It's on AVAX. Surf Yeti, one of our longtime supporters, and EMP VIPs. He launched that token, and he also launched a DAO called Venom DAO. Again, we'll post some links in our Telegram later tonight. But what he is doing is utilizing the strategy on his own. Again, it's not an official product of EMP, but it's somebody utilizing our system to create real yield for their own tokens. And this concept is absolutely massive. So imagine that you have a meme token, and rather than just relying on people to buy the token higher than what somebody else bought it for, you now have real yield because instead of, maybe do a pre-sale or some over-the-counter deals where you build up a treasury, rather than just, letting it sit there doing nothing, or if you're more of a malicious dev, maybe you take that and run with it. But you actually able to put your capital to work, create yield, and then buy back your own token or utilize those funds to pay for development without having to sell your token. Um, it's just an amazing way to utilize bonds on your own to support your own token. And again, we do this with EMP, we do this with eShare, we do this with Mo. A lot of you are familiar with Mo Money or Broke No Mo on Pulse. This is the exact concept that we use. So Mo is a tax token, and every time somebody buys or sells, we get a little more Pulse and Mo. We burn the Mo, and we use the Pulse to then go into bonds. Again, we have the bridge, sell Pulse, bridge to ETH, our base, and then bridge back. And although that is selling pressure on Pulse in the short term, long term we bring way more TVL and buying pressure back um, in a sustainable way to Pulse and ultimately Mo. So again, these sort of things are amazing, and the infrastructure is already here. Like any one of you could start your own meme tomorrow and utilize bonds to support it. So I encourage all of you to do that, and that will help get even more TVL into bonds, and be a very sustainable way of running your own token as well. So does that make sense, LA? I don't know if you want to elaborate.
Yeah, I don't necessarily have anything to elaborate, but it makes total sense.
Awesome. All right, cool. All right.
And then were
Yeah,
you
go ahead.
going to kind of mention how this could possibly correlate to EMP in the future?
Yeah, for sure. So, again, we are doing this with EMP. I think we outlined it a little earlier, but again, we Fusion is still the focus. I think people think that like, we forget about things or we don't follow through. But the whole idea is that we utilize bonds, our own bonds, again through the Treasury, to fuel EMP. So again, just everything I just mentioned applies to EMP, and what we've been doing for 3 years is that we are utilizing the real yield from LP providing. Obviously, we didn't have bonds, the easy button back then, so we were doing the LPs on our own. But this again is proof not only that we're bear proof and have the track record, but now we're able to utilize this yield to support EMP. So what that looks like is in the short term, we are buying and burning EMP and eShare until we're at peg. Once we're at peg, we utilize that to add liquidity and keep our peg stabilization bot going. And then once there is no more EMP, because everything's been sacrificed, then we use this real yield to bolster Fusion APR. And that's another thing that we said in some other AMAs. Bond APR would be basically the floor APR of Fusion because we still have all the revenue from the Treasury and bonds going into uh, Fusion that we own, and we have all the additional revenue. So Universe Madness revenue when that starts, all of DEX swap fees, split with GDEX, of course. All the things that we're building that add even more revenue on top will then further boost Fusion APR as well. So bonds
This
are
is
the
why getting back to peg matters, because right
totally.
now the rewards the Treasury are earning, the majority of anything of that can go into Fusion is helping to support peg, helping to support the eShare price. When we're back at peg, like AJ just said, I really hope this soaks in because this was a big light bulb moment. So I wanted to draw attention to it. Bonds and the Treasury's position within bonds is only one revenue stream to Fusion. So that's why it's so important right now to build your Fusion position and get ahead of any dilution that will come when we're back at peg and then all of a sudden everybody wants in.
Yeah, absolutely, LA. So again, let's just one more thing to break it down as simply as possible. Bonds are the immediate revenue stream for all of you right now. If you're brand new to the ecosystem, I would say start with bonds. But that being said, Fusion is leverage on bonds because when Fusion is back firing on all cylinders, the APR could potentially be much, much higher, and you get again the peg bonus multiplier, so your position is also worth more, even above and beyond what you may earn from price appreciation in bonds. So all that matters, and peg does still matter. I mean, yes, peg is less relevant now because we're not a seigniorage protocol and it doesn't inflate at all in that regard. But peg absolutely matters because peg sets a fair market value. And the way that we've designed uh, uh, um, Fusion is there has to be a hard number of peg to make it fair and to actually give people the incentive to buy EMP when we are below peg and potentially take profit in EMP when we are above peg. But that all is very short lived when all the EMP is sacrificed into Fusion. Then, yes, at that point, when everybody is in microgrids, then peg doesn't matter because there is no more EMP and we're all earning very similar to how we're earning in bonds, but even more so. So, again, that is the rollout. It is a very multi-step process, but it's working. I mean, we have a very clear plan on how this is all going to come together. So cool. All right. I think I covered it. I hope that was some really bullish things. Again, you're right, LA. We're gonna go buck wild on this AMA. So, all right, LA again, if you don't mind, will you just go over the legacy contracts and I'll elaborate a little bit if you just go through some of the bullet points and I can kind of follow up.
Yeah, for sure. So, obviously, just to let you guys know whether or not you're asking in the comments, we're committed to always giving you updates on this because we know that a lot of people are paying attention for those details. And so, we have been tirelessly working on getting both the legacy contracts migrated and for the crediting of those USDT batteries that went missing. And so, we have run into a few issues that we've been troubleshooting through. And we do ask for your patience because things are taking a little bit longer at the moment with just 3 to 4 devs. We don't have the full force of those 30 devs like we did before the hack. And so just know that our priorities lie in getting everyone compensated from the hack as quickly as possible. And as we complete that compensation, we can continue to scale up and hire back more devs as we grow. But in the meantime, we are doing absolutely everything in our power to get these legacy contracts migrated as quickly as possible. And we'll continue to keep you updated. You will know when it's time. There'll be announcements everywhere. We'll be talking about it on our AMAs. But just know that this is one of our number one priorities right now. We've been working on it really diligently over the last few weeks, and we are working to get it done as quickly as humanly possible.
Yeah, absolutely, LA. So again, just to elaborate, I know I get in trouble all the time because I do give timelines, but that's just me being the eternal optimist. Developing is very hard. I mean, again, I've talked about this a few times, but uh, I wish that we could flip a switch and everything would work, but it's just not the case. So we're working on it. I think, again, just to give a little more context, we may be able to roll out the USDT battery first because that's a little bit less code. But we're doing both the USDT batteries and the migration. So, and I do see some comments about that we'll get into in a minute, but nobody has lost anything. The beautiful part about blockchain is that it's all there forever, immutable and timeless. So we have all the data. We know everybody's positions. We know all the numbers, and everybody will be, given credit accordingly. And we've posted everything we can. I mean, in all of our socials, in the pinned messages, you can see the math of how we're going to do this. So again, I understand people are frustrated to have to wait, but honestly, on top of everything LA said with the whole dev team, we really have to prioritize bonds right now because that is literally propelling us into the future. And if you want to actually be able to, cash out and earn from your diffusion migration, then bonds are very important in that flywheel. So again, it isn't just like we're not doing anything and focusing on other things that don't matter. Bonds are literally making the migration even more successful when we're able to do it. So hopefully that helps give everybody some confidence. So cool. All right, awesome, LA. All right, you want to jump into some questions, or was there anything else? Oh, SparkSwap, right?
Yes.
All right, so yeah, one more, and again, there are some questions about that as well. So yeah, unfortunately, we were reported for phishing for our domain, and so we're in contact with them right now. It's actually the other Spark that was actually phishing, and maybe they were the ones that reported us. We have a bunch of Telegram groups that were trying to copy our name once we switched to DexSwap. So it's been creating a lot of confusion on all fronts, but the short answer is we're working on it. We should have it fixed within the next 24 hours. Again, in a worst case scenario, if they don't reinstitute, then we'll spin up a like what's the right word, LA? A copy link. So man, I'm lost for words today. Basically a secondary website with a new URL, but the same website. So
All the
don't fall. Yeah,
contracts are safe, all your funds
exactly.
are safe. That's the important thing to drill home.
Yes, thank you, LA. So again, based on how this all works, all the contracts on chain don't change. The website is just the front end, or the website. So we can easily copy that and do it on another URL. So, but don't get scammed either. If you see a copy of our site and it asks you to reconnect your wallet when you know you already have, that's another sign that it's a fake. So just don't follow any DMs, don't follow any unless you see it pinned in our actual telegrams, which again, we're no longer a SparkSwap on the socials. It's under DexSwap. So that again is part of the confusion. And we are still have every plan. Again, nothing is abandoned, nothing has changed. You will eventually get credit for your Spark tokens in our new DexSwap token again once we get to that. That's next up after legacy migration and finishing out bonds. The next step is really moving forward with DexSwap. So okay.
Yes, amazing. Yeah, and then just to kind of reiterate what was said, to give you more detail about what happened, we had the SparkSwap Telegram group, correct? And then we made the decision to take our largest group and merge it into DexSwap because very soon in the near future, the CetoSwap and the SparkSwap websites will merge into DexSwap, and all of your positions will be held within DexSwap. Well, when you change your username, you give up your original username. And unfortunately, it wasn't something that I thought of ahead of time that someone would try to copy us and actually be able to use the username that we had been using. And so with them taking our old username, I couldn't all of a sudden take it back. And they were hosting fake airdrops and whatever else they were doing. And they had a large group because you can add a bunch of bots to look legit. And then someone reported the website thinking it was the real SparkSwap doing that because it was our same old username and they thought it was us. And so it's really unfortunate, but we just have to communicate with the people behind our front end website
Yep, our
to
servers. Yep, exactly.
prove that it wasn't us doing anything malicious. And so we just have to show them the proof and then have them get back to us and reinstate it. Or like AJ said, if they're not willing to reinstate it, we'll switch the URL.
Perfect. All right. Yes. Thank you, LA. That was a much better explanation. I was at a loss of words on that part for sure. So, all right, we're making headway. All right, awesome. I think we're ready for questions now. I can start, and then I don't know if you want to go through Discord as well.
There's nothing on
Yeah.
Discord,
Okay.
but I've been kind of going through the YouTube. The first one that I see that's like an actual question, not a comment, is how much have we paid down to the recovery holders?
Yeah, so that's a really good question. I don't have the exact numbers off the top of my head. I can do the math again. Just rough numbers. I mean, it's been a major headway. I mean, obviously you see on the bonds page, we paid out about 40 grand. If you take 30% of that, and then obviously the other fees from actual vaults themselves, because remember we're converting the majority of all the team fees into paying people back until we're made whole. So I don't have the exact numbers, but I know we're making major headway in that. I know one of my personal wallets was involved in the vaults on their own. We've been giving payouts in the escrow token every Friday. So yeah, I'll get a number, but it's definitely happening. I mean, we've said this too. I mean, if we can get to like 5 million TVL in the vaults, we can have all of the debt paid off within like 2 or 3 months. So 10 million would be like 1 month. And so again, that's another reason why we all need to really support bonds and help get the word out about bonds.
Awesome. So I want to go over something based on some comments as opposed to a question because this light bulb just went off in my head and it's pretty golden. So there's this comment from Mr. Panic that says, yes, the bonds will survive the bear market, but what happens if our bond value drops by 80%? What's the point? You'd be earning 40%, but on a lot less money, right? So let me change your whole perspective for a second and get ready for your mind to blow here, okay? If you were just holding ETH in your wallet and ETH is worth $2,400 today, and we went through a bear market, it would also be worth 80% less if the whole market was down 80%. And then you'd be sitting there with something that's not even producing income, but it's just a token that's worth 80% less in your wallet. Okay. So that's the first part of this. But the second part of this that's going to change your whole perspective is if every week right now you are taking a small chunk of what you're earning from bonds and leaving it in stables and you call it your bear market fund. What would happen is if when we get to the bear market, if the value of bonds had dropped by 80% because ETH has dropped by 80%, you could use that bear market fund that you've been collecting all those months to buy more bonds at an insanely cheap price. So maybe at that point, you're able to actually double, triple, quadruple your bond position. Then you're back to actually earning what you were earning in the bull market, except take this point right here. When we then go through a bull market, and if the price even goes back to what you bought it at, you have double, triple, or quadruple the amount of money that you started in. And that does not even account for the yield you've been earning the entire time. That is the power of bonds. That is why it's bear proof. And that is why you can win if you choose to think about things in the right way.
I love it. Oh my God, mic drop, LA. Holy cow, that was great. I literally could not have said it any better myself. And yeah, I mean that is we need to clip that because that is everybody's argument to the bear market was summed up there by Mr. Panic or Mick Panic. And LA again, everything you just said is the absolute truth of how it will actually play out in reality. And again, to simplify that in the most easiest way is what are your other options? I mean, a bear market is a bear market. And, again, I don't want to reiterate everything Ella just said because that was epic. But yeah, I mean, you're earning on top of you need the asset anyway. If you're going to be down, you might as well at least be earning. And again, I mean, we don't ever recommend swing trading. LA's example was exactly what I would say in terms of having a little bit of a savings account that you can then DCA in a bear market with. But another thing to do would be selling bonds at the top, what you feel is the top. Again, that's really hard to do because it could be the top, it could be, you know, the top before another 2x on ETH. So you really never know. But the other option would just be to sell bonds when you feel we're at the height of the market and re-enter with way more capital, a few months after or whatever it might be. So there is no right or wrong answer, but what LA just said is absolutely the golden playbook, but not financial advice. So there you go. Yeah,
Hell
cool.
yes. Okay. I'm jazzed. Today's been a day full of being jazzed. All right,
Yeah,
let's
I
see.
love it. LA's got her fire back. It never left, but yeah, we're on a roll today for sure.
All right. So I already answered him in the chat, but let's remind everyone you didn't lose your nodes, you didn't lose your detonator position. Everything is being migrated to Fusion. And so, yes, it's been taken off the old site. But in this process of migrating, we're working on transitioning completely away from the old site. We have to keep it up because some people still have not removed their funds from the inactive farms, and we have to give them a place where they can do that. But other than that, we're not using that old site anymore. So we are working hard right now with our devs to prepare everything to migrate all of the legacy contracts over to Fusion, and you will be credited for any of your node positions, detonator, reactor, generator, sentinels, or defenders. The only part of that that is not changing from how it is now is our power ups, because they've been continuing to earn this whole time and nothing is changing with them. And so if you click back maybe 6 to 8 pinned posts in our EMP chats, you can see the exact math for how you'll be credited. The most important thing now is to pay attention to pinned announcements, only pinned announcements or anything AJ or I physically say on these AMAs. But you will have to require a few actions when it's time. And so it's really important to pay attention to the pinned announcements, because when it is time, there'll be a little bit that you have to physically do in order to receive your credit within Fusion.
Yep, perfect. Okay, again, no need to elaborate when that's all the info you need. Again, that was the whole point of creating EMP Fusion. We are no longer a seigniorage protocol. We don't have to give credit to anybody. Again, 99% of crypto, when there is a migration like this, you have to just, move on. But we are doing the right thing. Again, we have nothing to hide. We're doing it in full transparency. And so yes, you didn't lose anything, quote unquote. We're giving you the credit. And again, all the math has been posted in our socials, and you will need to take some action though as well. So we can't just, we don't have access to each individual user's wallets. So you do have to actually have proof of life that you are still in the ecosystem, you are still around. We'll have full instructions on what to do once the time comes, and then your position will be put into EMP Fusion, because EMP Fusion is the future. We are no longer, the old legacy EMP, seigniorage protocol. We are EMP Fusion, and we're excited for that. I mean, again, no more inflation, cap supply, real yield, no Ponzonomics, everything that you would want in a protocol moving forward. So cool.
Love it. Okay, another question for Mr. Panic. I want to ask about the APR before Bernard bonds,
Yeah.
which was basically the same when we were 50-50. After that, we went to 70-30, but it seems the same. How is that possible?
Yeah, so that's actually a really good question. The short answer is that the different splits were only really a thing for like 6 days. So again, APR, I don't know how many times I have to go over this, but I'll do it every day if I have to. APR is annual percentage rate or return. So A stands for annual. So it's nearly impossible to predict a yearly APR within a week or even a month. So that number will always fluctuate. And again, the reason that the APRs were roughly the same, even with the split for those few days, with the split difference, and now everything, again, moving forward, 70-30 split on everything. And the reason, again, just to give more background, the reason we did that is because, with more TVL and making the bonds more attractive to new users, we were able to pay out the debt quicker, with a lower percentage because there was more TVL. So that was a decision about reducing from 50-50 to 70-30. And again, the other variable was when we did this split, there was already about $400,000 in Treasury bonds and only about $100,000 in Bernard bonds. So in that short amount of time, we can't put all the capital to work. So even with the splits, it's more about having the capital and the inflow be so unpredictable, is why, again, the APRs were all over the place. So hopefully that answers. Again, moving forward, everything now is a 70-30 split. And, now that there is at least, 200 grand in Bernard bonds, even if there is a lot more new capital coming in, it's only going to affect the APR for, a few days until we're able to deploy all the new funds. So hopefully that helps.
Awesome. Okay, what's next? Rhino, that would be a great thing to maybe message Surf Yeti about and get his 2 cents. I'm sure he'd be happy to chat with you. He's Ephemeron on Telegram and Surf Yeti on Discord, but that would be great to reach out to him to chat to him about if it's something that you want to learn about. I think it's a little bit advanced for us to actually go over fully on an AMA because the average person listening to this is not going to go ahead and make their own meme coin. But if you want to reach out to him or even AJ privately, I'm sure either one of them would be happy to share a little bit of info with that
Yeah.
on that.
Absolutely, Rhino. Yeah, absolutely. Again, anybody, feel free to reach out to me on X and or Telegram. Yeah, I mean, to Ella's point, I think it's a little bit overkill to do it on an AMA, but there are a ton of resources. Even like a Pumped Out Fun, although I think they may be under some issues right now, but there's many services. I think BSC has one. Many services that you can launch a token and do it on your own with very little code base. And then once you build the community, I would say do what we call OTC or over the counter, where because usually when you launch your own token, you keep some of the supply of that token, and so you would basically sell that token to your community without having them trade it on a chart or providing liquidity, and then you can use those funds to put it into bonds. So that would be like the real low hanging fruit on how you could make that work. But by all means, I'm happy to give you guidance where I can. And yeah, Surf Yeti, we have a lot of really great members in our Telegram that I'm sure could help you conceptualize what to do for sure.
Amazing. Silverback saying 40 watching, 16 likes. So your daily reminder, if you are watching, please like this stream. Make sure that you are subscribed to both our YouTube and Twitter accounts. And please hit that retweet button if you're on Twitter and the share button if you are on YouTube.
Yeah, no doubt. So shout out to Silverback too. A long time community member. we're having a lot of fun, man. Me and Silverback, we chuck it up in DMs. We were having a great conversation today on a potential add-on to bonds that I'm super excited about. So we're always brainstorming. We're always trying to implement, things for the greater good, so to speak. So yeah, shout out to you, Silver. Thanks for all you do, brother. Appreciate your continued support and feedback and everything else. So, and a lot of you, again, I know that just because of our conversation today, I wanted to call that out. But all of you that show up to these AMAs, that consistently give feedback. Again, DeFi After Party. That's Christian, the one I mentioned earlier. We did a great interview. So all you guys, Mega Buddy, and gals that are here, supporting the cause. So yes, like, comment, and subscribe to continue to boost our message out there. Cool. All right. Is that it, LA? I think that is the majority of everything, right? Yeah.
Yeah, I'll just explain this one more time for Mega Buddy. So we switched our Telegram channel to DexSwap, and in doing that, you have to actually change your username. Well, when we changed the username, our old username became available. So they didn't have to steal it or anything. It became available, and they assumed that username. They created a fake group that was impersonating the real group. They were offering fake airdrops, and somebody reported it as a scam. And because it was reported to, what is it, the domain hosting site or
Yep.
something like
Yeah,
that?
exactly. Our domain hoster and server
Yeah.
provider. Yep.
And so they then temporarily took the site down because of that report to protect anyone against getting scammed, basically. So now we just have to show our domain hosting site that it was not us carrying that scam out, that it was actually some malicious actors acting in their own accord completely separately from us, and it has nothing to do with our project, aside from them impersonating our name.
Perfect. All right. Hopefully that clears that up. And yeah, we're working on getting either that reinstated or there will be a new URL implemented if it's going to be more than a few more days, because I know people are panicking. But all your funds are safe. The smart contracts are still there. If you know enough about blockchain, you can actually interact with the smart contract yourself, and still make it work even without a front end. That's a cool part about crypto, but don't do that unless you're very skilled, because you could mess it up for sure. So, all right, awesome. All right, yeah. And then one more little bit, LA. I know we're going long tonight, but we have some mega news over on our HVM stream coming up in just about 30 minutes. So please make sure that you're following Honor versus Madness. That is our AAA Web 2/Web 3 game that is set to release later this year, and we will be announcing our new home chain with a lot of info about that. So come on over and make sure you're listening again, and that matters for EMP and our entire mothership, because we get 10% of all revenue from that game, which again could be hundreds of thousands of dollars a month, feeding Fusion and our entire mothership. So, all right, LA, any final words? We killed it tonight. You
Yeah,
were
it's
on
a good night.
fire. I think we had a really good night. So yeah, go ahead. Yeah.
Yeah, I just want to thank you all. That was such a great stream. Great questions, great Discord, great discussion. So thank you all so much for being here. We really appreciate you. We've even peaked a couple of the people that we did live streams with this week. I see DeFi After Party in here supporting. So shout out to you. I saw Rec to Riches in here earlier. Shout out to you. So that's amazing. Thank you to every single one of you for being here. We're going to keep building this up and get not only to where we've always wanted it to be, but far beyond. And it's because we're doing it together. Every single one of you matters. And make sure you're on the next stream in 20 minutes because it's huge news.
All right, there you have it. Let's go. And in the words of LA, let's fucking go. So yeah, I appreciate all of you, and yeah, we're making it happen. Again, we had some definite road bumps and hurdles to overcome. But again, to quote LA, again, that's part of our hero's journey here at EMP and the entire EMP conglomerate. So all of you have been amazing. Thank you for continuing with the support and the love and the patience. But now we're really getting to a point that, the lights at the end of the tunnel, things are firing all cylinders. We're in full, yield mode right now. And all of that will carry over into eShare and Fusion and GDEX and everything that we're doing. So, all right, awesome. Remember that we come come to every Thursday at 6:45 p.m. Eastern. And we will see you next week, same time, same place. Have a great weekend, everybody. Good night. Good day. We'll see you then. Bye bye.